RSV, parainfluenza, adeno-rhinoviruses, all this sort of virus soup that kids are coming in with. So I don't think we can say kids are getting sicker from or dying from, but they're certainly being hospitalized with COVID. And so the thought is, since antibodies cross the placenta, that mothers or pregnant women probably would benefit from getting vaccines and being boosted, because that should give passive immunity for the first few months after delivery to the babies. Complicating that, and certainly that's true for older people too, definitely be up to date. We've talked for a long time, diabetes, heart disease, lung disease, those people are much more at risk. So we're not seeing a big increase in COVID deaths. The opposite, we're seeing fewer cases nationally, and the death rate is dropping as well. But for vulnerable populations, they need to be aware of this.
Dr. Lustbader, is it fair for folks to characterize where we are in this process as the COVID is endemic, not pandemic?
Yes, I think that's a very good term, and I think, that's what we will see. In other words, endemic, we're going to be living with it for a long time. We're seeing more and more variants. This Nature journal talked about variant soup, XBB. Different countries are having different offshoots of Omicron, which is why, in part, we need to find out the origin of the virus, because this is new. We are not really living with viruses in the past that have had the ability to mutate this much and really be in every area, and vaccines are not able to keep up with the mutations. We're seeing more mutations in what's called the receptor binding domain, right? So that's where the virus attaches, and when you have more RBD changes, and we're seeing really an exponential increase in those mutations and variants, you can have as many vaccines as you want. The virus outruns you. So there's a lot more work to do. The good news is, over time, whether it's vaccines or just getting COVID a few times, people seem to be more resistant. But how this will end, we don't really know yet. Yeah, certainly we're going to live with it for a while, but how it will end, we don't know.
So are you anticipating, I'm curious, you guys at NYU Langone, or what's the talk in the medical community, are we anticipating some other kind of spike among the general population come the fall and winter months? Or is it just like we'd see a spike in flu cases, which we know can also be deadly?
Right. Unfortunately, vaccines are not perfect, right? The flu vaccine is about 50% effective. We have to take it. Certainly, you don't want the flu. It's not fun, and it does kill, certainly, people. So I think vaccines are helping, but all of these viruses are piercing a lot of those vaccines. I do think we are going to see a bit of a rise, and I'm concerned about other countries where these other variants are going on that are resistant to our bivalent vaccine. So we don't really know, will that be another wave? It doesn't look that way at this point. The number of cases are dropping. Hospitalizations from COVID are dropping. What will happen in the winter? Hopefully it will stay in those other countries and not come to the U.S., but we're not sure.
Yeah, right. Stay tuned for all of this. Ian, thank you so much. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center, joining us on the phone in New York City. And Paul, I just got to go back to the markets. You still have about a 4.7% gain on the S&P 500. Dow Jones Industrial Average, as Charlie mentioned, up more than 1,000 points, good for a gain of 3.2%. But the NASDAQ, it's really those big tech names that have been beaten down, really leading the charge up more than 6% today.
And I'm looking at the volume, Carol. Very strong volume today, 25% higher than the average. So that's conviction buying for you. We talk about conviction selling. This looks like some conviction buying out there.
Yeah, and you definitely have seen some buying into the Treasury trade as those yields have really plummeted as well. All right, more on the markets in a moment. Right now, though, let's get more on world and national news with Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. President Biden heads to Egypt tonight for the COP27 Global Climate Summit. Aides say on the sidelines, he will be holding his first in-person meeting of his presidency with China's Xi Jinping Monday. The two are expected to discuss tensions over trade and Taiwan. Ahead of Biden's trip to the climate summit, he's making a move to bring the federal government in line with the Paris Climate Agreement, as we hear from Bloomberg's Nathan Hager.
The Biden administration has released a proposed rule that would require all major federal contractors to set emissions reduction targets based on the Paris Accord. The Washington Post reports the rule would cover about 85% of emissions from the federal supply chain. Companies with less than $7.5 million in federal contracts would be exempt. President Biden's already called for the federal government itself to be carbon neutral by 2050. In Washington, I'm Nathan Hager, Bloomberg Radio.
Former President Trump is taking unusually harsh public criticism from conservatives after many of the candidates he endorsed in the midterms went down in defeat. Bloomberg's Anne-Marie Hordern has more from the White House.
A lot of people are blaming the former president for his picking of candidates that they say just didn't have the credibility or the quality to win, especially Senate statewide races.
Bloomberg's Anne-Marie Hordern, former New York Congressman Peter King, tells the New York Times that the former president should no longer be the face of the party, saying it cannot become a personality cult. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Nancy Lyons with World and National News there in our D.C. newsroom. Our folks in D.C. have been really busy because of the midterms this week. And we go, Paul, so quickly from the midterms to the presidential election.
Exactly right. And then speculation's beginning who may run. And Bloomberg's got a story out here. Newly reelected California Governor Gavin Newsom has spent months deflecting speculation that he plans to run for president, saying he has, quote, sub-zero interest in getting into the 2024 race. But, this has been something that's been talked about for a long time. And for him, it's a practice response from someone who has been tagged as a future contender for most of his life, even back in the 10th grade. So
isn't that crazy?
It is. The kids dubbed them El Presidente. Yeah, exactly. So we'll see. I mean, it's just, he's always said, I believe, that he'll defer to Biden, to Kamala Harris, and things like that. But we'll see. 2 years is a long time.
It's over. I always think it's fascinating. Yeah, politics, generally speaking, but just the jockeying inside a party, especially when you've got an incumbent who has President Biden coming out saying very clearly this week that he's planning to run. But you can imagine what's going on internally inside the party because, to be fair, President Biden is not a young man and, there might be other individuals and I'm okay with whatever age. But I'm sure that there's a lot of conversations going around, what makes the most sense for the party and the future of the party. And, we talk about politics and political parties having benches and deep benches. And so he is certainly one of those that are being considered, along with, I guess you could say, certainly the vice president.
Yeah, and what's been interesting about Newsom, he's been pretty much out there in terms of his criticism of some of the Republicans, even Donald Trump, even Ron DeSantis, the newly reelected governor of Florida, taking them on directly. And obviously, so there's that aspect to him that might appeal to some in the Democratic Party.
Well, and I think about during the pandemic, man, covering the press conferences, and Gavin Newsom was a voice that we went to regularly and felt like it was a voice of reason and calm as we tried to get a handle as the pandemic was unfolding. All right, you are listening and watching Bloomberg Business Week right here on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks trading, holding at just about the best levels of the day right now. An intense CPI relief rally underway. Right to the numbers. S&P now up by 4.7%, gaining 176 points. The Dow is up 1,038 points, up 3.2%, while the NASDAQ Composite Index up 645 points. That is a gain of 6.2%. 10-year yield 3.83%, with the 2-year yielding 4.32%. Spot gold now up 2.7%, $17.53 the ounce. West Texas Intermediate crude up 0.6%, 86.35 a barrel on WTI. A surge for Bitcoin today, up 10.1%, 17,326 on Bitcoin. Amazon shares surging 11.4% after the Wall Street Journal reported that CEO Andy Jassy has embarked on a new cost-cutting plan, part of broader efforts to streamline the world's largest e-commerce company. Recapping, the 10-year yield 3.83%. Stocks are rallying with the S&P up 4.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
The world seems to be tightening its belt. All right, Charlie, thank you so much. Well, the new issue of Bloomberg Business Week, it is out. It's on newsstands. It's online at Bloomberg.com/businessweek, and, of course, on the Bloomberg terminal. The cover story, appropriately so, is about this week's midterm elections. It's a story you'll find in the issue's remarks. It's about Republican Congressman Kevin McCarthy's dream and nightmare coming true. Here to explain Bloomberg Business Week, national correspondent Josh Green. He is with us on the phone in Washington, D.C. Josh, good to have you here with Paul and myself. So tell us about Kevin McCarthy, his dream come true, and yet it's probably not exactly maybe like he envisioned.
Well, McCarthy is a longtime Republican House leader who has wanted to be Speaker of the House for years and years and years, was expected to be in 2015, and was sort of forced to remove himself from the race in favor of Paul Ryan before he could get in there, because he just didn't have the trust of the right wing of his caucus. Over the last 7 years, he's plotted, he's raised money, he's campaigned, and it seemed like on election night he was on the cusp of taking over the speakership, maybe by a pretty wide margin. But then, of course, the red wave turned out not to be much of a wave after all. And so what I write in the New Business Week is that it still looks like Republicans are going to win the House, but it's going to be a very, very narrow majority. And so it's the dream for McCarthy in the sense that he'll finally realize the speakership, but it's a nightmare because it means that the right wing of his caucus, radicals like Marjorie Taylor Greene, are really going to have a lot of leverage over him, and I think that's a recipe for chaos.
There's a great quote in here from Senator Greene. Quote, she made this to the New York Times. "I think that to be the best Speaker of the House and to please the base, he's going to give me a lot of power and a lot of leeway." So that's some pressure on the next Speaker of the House, whoever that is, to really do cater to some of the right-wing elements of the Republican Party. Is McCarthy able to do that?
Well, I think he's in a position where he's not going to have much of a choice. He needs, in order to get elected Speaker, he needs 218 votes. And if you've got, had there been a big wave and there were, let's say, 250, 260 Republicans, I think he might have been able to marginalize people like Representative Greene. And just to be clear for listeners, this isn't somebody who wants aggressive tax cuts. She is someone who suggested a while back that forest fires in California were caused by lasers from space. She's retweeted a lot of QAnon conspiracy theories, and she was stripped in this current Congress of her committee assignments for having endorsed social media posts calling on Democratic officials to be assassinated. So we're talking way, way off the deep end, extreme right, and yet you hear from the quote you just read that she expects and is getting a lot of catering to by McCarthy, simply because he needs her vote in order to assemble those 218 votes. The smaller the Republican margin is, the more leverage people like Greene and the House Freedom Caucus are going to have.
Josh, it feels like the Republicans over the last few years, 5 years, 10 years, I guess, have been smart when they're all kind of on a singular mission. And whether it's Supreme Court justices and, different initiatives that are out there, abortion and so on and so forth. What is, though, the Republican mission at this point? What is the agenda? Because you're right that that's a problem for McCarthy because they don't really have an agenda.
Yeah, it is. I mean, one of the difficulties when you have a kind of chaotic Republican Party like McCarthy does is it's hard to get people to agree. You have an establishment wing that wants you to govern responsibly. You have a radical ring that wants to impeach Joe Biden. And so Republicans this election really didn't agree on a clear set of legislative goals the way that, let's say, Newt Gingrich did in the 1994 contract with America. That was in order to focus attention on Biden and the problems with inflation and crime. And it looks like that's worked to a very narrow extent if Republicans do wind up winning the House. But the problem is it leaves a vacuum for anybody to rush in and push their issue. And so one of the things that we're going to be contending with, that Republicans are going to be contending with, is there's an element that wants to engineer another debt ceiling showdown in order to cut Medicare and Social Security. I'm sure you guys remember 11 years ago, after Republicans won the House, tried to do that same thing. We came to the brink of default, and U.S. government credit wound up being written down. So a lot of concern among both Republicans and Democrats, or at least the more responsible ones, about what exactly a McCarthy-led House would look like, what they'd be able to engineer, and what kind of problems that might cause for the global economy.
So, I mean, you point out in your piece here that, boy, it's tough to be a Republican Speaker of the House. The last two, John Boehner and Paul Ryan, they were effectively hounded out of the position and out of politics in general by the right wing of their caucus. I mean, Representative McCarthy has to be sensitive to that, cognizant of that. I mean, Representative McCarthy has to be sensitive to that, cognizant of that.
Absolutely. I mean, the lifespan of a Republican House Speaker, it's sort of like being the drummer for Spinal Tap. Like, you're not going to be around for very long.
Nice.
I argue in the piece, McCarthy actually has a tougher job than John Boehner or Paul Ryan, the last two Republican speakers who were both hounded out of the job by their right wings. Because the right wing is just more radical today. There's going to be a narrow majority. But the other reason is that, the big influential voice on the outside who's dictating a lot of behavior, Donald Trump, wasn't on the scene for John Boehner. I mean, John Boehner couldn't hold on to his job, and it was, Donald Trump wasn't even weighing in. Well, he's going to be now. Everybody's expecting a presidential announcement from Trump in the next couple of days or in the next weeks. And he's somebody who likes to weigh in and criticize people, Kevin McCarthy in particular. And that's one more headache that McCarthy is going to have to grapple with as he tries to cobble together this narrow majority and keep his Republican caucus from revolting.
So does that mean you're expecting that he doesn't really get anything done, or maybe?
I think that's right. I think it would be considered a win for McCarthy and Democrats, if we're just able to avoid a debt ceiling default. But as far as passing legislation, if McCarthy takes over and Republicans win the House, that effectively ends the period of the Biden presidency where we're getting big pieces of legislation through the House. Nothing's really going to kind of get through. The thing that I think a lot of people are worried about is, will McCarthy be able to do basic things like pass an appropriation bill, have the U.S. government pay off its debts by raising the debt limit, the basic kind of blocking and tackling that didn't used to be contentious 10 years ago, but now has become very much so, and it's really not clear, is there going to be an adult in the room who can make these things happen, or is McCarthy in trouble?
Josh, really quickly, 20 seconds here. An impeachment of President Biden, is that likely to happen with him as Speaker?
It's certainly a possibility. A lot of Republicans telling Bloomberg News that that's something they want to push in the new Congress. It'll be made more difficult by the narrow majority, but I think it's something that's certain to come up.
Interesting times. They just continue. Josh Green, great cover story of Bloomberg Business Week. It is the remarks of the new issue of Bloomberg Business Week on newsstands, on the Bloomberg terminal, and at Bloomberg.com/businessweek. Josh, by the way, national correspondent at Bloomberg Business Week, joining us on the phone in D.C., and we appreciate
that sounds
thoughts.
like a thankless job.
Be careful what you wish for.
Exactly.
Although he's been wishing for a long time.
Yes, he has.
All right, you are listening and watching Bloomberg Business. We're going to catch up with our TV colleagues. We're going to talk about this rally on Wall Street, that inflation print. So much coming up right here on Bloomberg.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
We're about an hour away from the end of the trading day. Romaine Bostic here alongside Taylor Riggs. We're joined right now by our colleagues Carol Massar and Paul Sweeney. We welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and Quick Take on a day, Carol, that I think is going to go down as probably one of the wildest that we've seen in cross-asset markets this year.
Yeah, pretty wild this morning, right? That CPI inflation print hits. It's softer than everybody expected, and bam, you saw the equity futures shoot off, and it carried over into the regular trade. I've been looking at some of the outperforming sectors because it feels like there's a buy-in everywhere, but take a look at those home builder stocks.
Oh, yeah.
They're up about 11% in today's session alone. And if you take a look at some of the individual names, LGIH Home Builders, that one is rallying about almost 16%. You've got Mohawk, right? They provide flooring. They're up about 14%. And then DR Horton, which is one of the bigger players, they're up about 11%. So everybody, the expectations is, as rates have come down, the expectations that maybe the Fed will slow in terms of its rate cycle and rate moves, and that will play into mortgage rates or maybe start to bring some life back to that housing market, Paul.
Yeah, absolutely. I mean, I'm looking at the markets here and just amazed here at the strength we're seeing. And I've been doing this for a long time. And when I see a 1,000-point move in the Dow, that gets my attention. I don't care what the base set is. But what's also interesting today is the volume. I'm seeing some conviction buying out there. We have the S&P volume about 20% higher than its recent average, and NASDAQ, it's about 30% higher. So a lot of buyers out there pushing this market higher.
Absolutely here, and of course you're seeing that reflected in just the value being added. An S&P 500 up almost 5% here on the day. A NASDAQ 100 right now adding about $700 billion in market capitalization on the day, up more than 6%. The Russell 2000 also up 6% as well. And the Dow Jones Industrial Average, which Taylor tells me that today, I have to quote in points, up more than 1,000 on the day. I don't know what that percentage is.
Can I just say something? November 14th, 1972, if you trust Google, which I do trust Google, that was when the Dow climbed to 1,000 points for the first time in history, 76 years in the making.
That's also when Romaine was smoking cigs outside the CME.
No.
Apparently. It's also something I learned in the last 30 minutes.
Way.
Let's do size and scope, broad base. Let's go underneath the surface a little bit from some of the majors and take a look inside the numbers. Pretty stunning here. TAC is now up 7%. Discretionary up 6.8%. Real estate's catching a bid because bond yields are falling 6.7%. And pretty much in 9 out of 10, 10 out of 11 of these sectors, more than 90% of the names within these sectors are all in the green. The outlier to that, Romaine, is the staples, and yet there, only 70% of the names are in the green. So there's a lot of buying underneath the surface.
A lot of buying underneath the surface. You talk about staples. I was actually looking for some of the big decliners out there, and there really weren't too many that you can find here. You take a look at the healthcare space. Cigna shares down about 1% on the day. We should point out, Cigna, just a few days, hit a record high. And actually, you're seeing that a lot. A lot of the defensive names that have really been gravitated to over the last few days that have pushed them to 52-week highs, if not all-time highs, now being peeled back a bit. You see that reflected in the healthcare space, in consumer staples. There's still some stress in the crypto arena there. Silvergate Capital, which has, of course, is kind of the banker to the crypto world, if you will. They kind of have a very complex business that is directly tied to what's been going on. They're down here for another day, down about 6.5%. Home builders, as of course, as Carol was just talking about, Lennar up 13% on the day. And when was the last time you saw Amazon up double digits? Only happened, I think, a couple times this year.
$1 trillion in market value.
This is amazing. And now, yeah, remember, they just sort of got bumped out of the $1 trillion club, and looks like they might make it back in, depending on how this closes.
And it all comes down to CPI numbers. Lower CPI is great for this market, a market desperate for lower inflation. And today, Carol, at least we got one data point, one glimpse of that. Headline numbers that you see there in white, core year-over-year numbers that you see there in red. And then I love the bar chart because it sort of breaks down the goods and the services. Core services showing a deceleration. Really, all of this is good news for a Federal Reserve, hoping that the medicine is finally working.
Yeah, it does suggest that we're moving in the right direction, which is good, which is a pretty good thing. There's a most read story on the Bloomberg. I'm sure you guys have said it, and it talks about, or have read it, have seen Fed officials now talking about maybe dialing back the pace of its interest rate hikes. We saw Treasury yields, the big move that we saw coming off that CPI print. Among them is FOMC member who talked about
Lori Logan at the Dallas Fed. Carol, just be thankful I'm here for you.
I am so thankful.
That's all.
Lori Logan of the Federal Reserve. Here's what she had to say. Thank you, Romaine.
While I believe it may be appropriate to slow the pace of rate increases so we can better assess how financial and economic conditions are evolving, I also believe a slower pace should not be taken to represent easier policy.
All right, that's Lori Logan, of course, the president of the Dallas Fed here. So we're starting to hear this conversation here. I will say Mike McKee, though, who, of course, breaks down the CPI print so eloquently for us, did remind us that food and gas are still going up. Maybe the moves aren't so high, but they are still trending higher. And that's a big deal when it comes to most of us. We got to pay for that stuff, Paul.
Yeah, and we've been talking about crypto a lot today for good reason. We're trying to get our hands around this story. I'm just looking at Bitcoin right here. It's up about 10.5%. It had been really under pressure, so it's at about 17,300 now. Remember, it had been holding at that 20,000 level until just the past few days.
One thing we haven't been able to talk about on this program is that JP Morgan note about crypto and leverage in the system. I think one thing that really stood out to me is they talk about the number of entities with stronger balance sheets now able to rescue those with low capital and high leverage. It is shrinking within the crypto ecosystem. So it is really a conversation, too, about regulation going forward.
Yeah, and the idea that, though, who regulates? I mean, we've been having this conversation even prior to this big blow up. The idea that you have a lot of these companies that really have no regulator. I mean, let's face it, FTX.com, for the most part, was outside the purview of U.S. regulators to begin with, based on its structure, similar to Binance here. And there are going to be a lot of questions as to how you rein that in. I guess, guys, you have to find out whether U.S. investors were hurt by this and whether you can prove that there was something, I guess, some sort of malfeasance that led to it.
There's a lot of questions out there, but it is interesting to see on a day where crypto, right, all of these headlines that we've seen throughout the week, we saw cryptocurrencies under pressure yesterday, up today, but it seems like it's been boxed off certainly from the rest of the market trade. I will say I'm thinking about University of Michigan tomorrow and what we see about inflationary expectations. This is going to be key in terms of market valuations and where the market continues.
Does that end up being a little backward looking given what we got out of the CPI today?
I don't know. They're November numbers.
Okay.
CPI was
University
October.
of Michigan. There's smart people out there.
I'm just saying November, October, September, October, November.
As a guy from Chicago, I have
December
to say. Sorry, Michigan, but no.
All right, we're going to be back. We're going to continue this conversation.
Am I allowed
No
to
doubt
say that
about it. You're out of the gate, out of the gate. All right, we'll be back in less than an hour's time. We're going to count you down to the close on radio, TV, YouTube, and on Bloomberg Quick Take. Beyond the Bell, we'll do it at 4 p.m. Wall Street time.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so what a week. Midterms,
Yes.
the crypto story. But I do think the crypto story, it is interesting, right, Paul? I mean, it's not new, but it really has picked up momentum, I would say, in the last 4 or 5 years and gotten legitimacy where, like, the traditional players are saying, we got to be in it.
Yeah, I think this is going to add fuel to the fire about whether it is a legitimate asset class in and of itself. That's number one.
Is it an asset class? Is it a tool? What is it?
Exactly. And if you ask Jamie Dimon, he probably won't even respond to you. So that's a little bit worrisome. The other thing is it has to bring the regulatory discussion right to the fore.
Absolutely.
And when I saw Gary Gensler be named the new head of the SEC under the Biden administration, I thought that would be number one on his to-do list, to just try to say, hey, how are we going to regulate, manage this growing market? And if it's not us, who is it going to be? And we just haven't had any leadership on that front.
Well, it does feel like there's a lot of pointing, like, you have to do it, you have to do it, you have to do it. And at some point, somebody has to realize that there are investors actively, aggressively, increasingly getting involved in the crypto space. And you especially think about the mutual fund houses that we're thinking about, like, well, maybe we should be offering this in 401ks. Like, when you start to have that conversation, it's time for someone in the regulatory space to step up.
Yeah, and Sam Bankman-Fried, for the folks that are really involved in crypto day to day, they are shocked because they looked, even though he's a younger gentleman of 30 years of age, they looked up to him as one of the leaders of this industry, and to fail so spectacularly is a really shock for a lot of those participants.
Well, and this is where you really go back through the conversations that we certainly have. We're going to hear a little bit of what he's been saying, like, over the last 6 months or 12 months, if you will, and reassuring investors, sounding very sound, and there's fiduciary responsibilities, and you do wonder, and I guess this is what, at this stage of the game, that now regulators are going to have to be looking into.
Have to, I think, and you don't want it to be the states individually. You'd like to see a federal response here.
Yeah, absolutely. Hey, right now, folks, we see stocks moving up to their best levels of the session, so almost 5% higher on the S&P 500, 3.5% higher on the Dow. NASDAQ better by 6.5%. All right, back to world and national news. That means back to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. Nicole, now a tropical storm, is lashing central Florida with heavy rain and powerful winds, leaving a trail of blackouts and floods. Governor Ron DeSantis says this storm may not have been as strong as Hurricane Ian, but it is still destructive.
You're seeing communities, particularly in the Volusia County area, where you had a lot of that erosion on the coastline. This has put some of those structures in jeopardy, and they've been working very hard to make sure everybody's safe.
DeSantis says more than 300,000 people were without power. Nicole is expected to dump plenty of rain over Georgia today. President Biden is heading for the International Climate Conference in Egypt later today as he presses ahead with climate measures while the nation continues to need fossil fuels.
The administration has been represented at the conference by top climate officials, including Environmental Protection Administrator Michael Regan, who spoke in a Bloomberg interview.
Many countries are overly reliant on fossil fuels provided by countries like Russia. If we were not so dependent on these fossil fuels, if we had made the proper investments in clean technologies and energy efficiency and more domestic opportunities, we would not see the price volatility that we're seeing internationally. So it's a wake-up call.
Regan said he's been urging industry officials to invest in technology that would curb the release of climate-damaging methane. In Washington, Irv Chapman, Bloomberg Radio.
A Norway spruce tree in upstate New York is being cut down today and transported to New York City, where it will be the centerpiece of holiday celebrations in New York City's Rockefeller Center. The lighting ceremony set for November 30th. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons, in our Washington, D.C. bureau and newsroom. All right, so we're staying on this crypto story with good reason. We're all trying to make sense of it and what it means. Meanwhile, there's always like side stories.
Yes, you don't think about them.
I love this one.
Yes, exactly. And it goes to our good friends down in Miami. Miami-Dade County will explore all legal remedies if FTX.com, the beleaguered crypto exchange, can't meet its obligations as part of a 19-year agreement for naming rights to the arena where the NBA's Miami Heat play. FTX, the crypto exchange led by Sam Bankman-Fried, inked a transaction last year to take over naming rights of the area in downtown Miami from American Airlines. But you're talking about a blue chip name to a .com. I mean, if I were the arena's owner, I would nervously accept their money.
American Airlines now, you mean?
Yeah, I mean, if I were, if I were the arena, it's like, okay.
But you've seen this like turnover, right, in the naming rights, and all of these kind of newer firms stepping up and putting their names on a lot of arenas and stadiums. But it is kind of interesting. Miami-Dade, under the terms disclosed, I guess at the time when FTX stepped in to do this, Miami-Dade would receive a net $90 million over 19 years to invest in programs including reduced gun violence. FTX had also committed an extra $5 million to the local community, according to a statement released at that time. And like you said, no check in the mail. Just give me the bags of cash.
Yeah, and as our producer Ari just mentioned, Staples Arena in Los Angeles, another Staples, a Staples story. Crypto.com is the new naming rights. I mean, you got to be nervous when that happens.
It used to be like, it's funny, I feel like that there's almost a trend, like you put your name on a stadium and like
done.
Kiss of death, or you build a new like massive headquarters. It's like kiss of death.
Yes, exactly. I mean, as a shareholder, I know a lot of investors, if they own a company and they see that the company's building this gleaming tower, they will very quietly sell their stock. I've seen investors do that. It's very interesting. They just think that's just one of my tells.
It's like the office or the headquarter indicator, right?
Right, exactly.
All right, you are listening and watching Bloomberg Business Week. Carol Massar along with Paul Sweeney. We're going to catch up with our Matt Levine, who recently wrote a whole issue of Bloomberg Business Week on crypto.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletan. Intense CPI relief rally underway. You can call it epic. We have got the Dow, the S&P, and NASDAQ all surging. Right now, the Dow is up by 1,132 points. That is a gain of 3.5%. The S&P 500 index up 191 points right now, rallying 5.1%. NASDAQ is up 692, a gain there of 6.7%. The 10-year yield 3.82%, with the 2-year yielding 4.32%. Spot gold up 2.8%, $17.54 the ounce, while West Texas Intermediate crude up 0.6%, $86.36 a barrel. I'm Charlie Pelletan. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the crypto story, that was the recent cover, really entire issue of Bloomberg Business Week, was written by Bloomberg opinion columnist Matt Levine. So I knew we wanted Matt to weigh in on this week's flurry of activity and calamity surrounding the meltdown of the crypto exchange FTX. Matt is a Bloomberg opinion columnist covering finance, former editor of Dealbreaker, former investment banker at Goldman Sachs, so much more. He is back in our Bloomberg Interactive Broker studio. Thank you, thank you, thank you. I know you're busy. You went through all the nooks and crannies of how the crypto world came to be, really taught us kind of the understanding of all of the terminology, of the significance of the development since crypto has come to be. How do you then take this week and kind of cross it with what you wrote about?
Well, I mean, one thing that I wrote towards the end of that piece was that crypto this summer had its own 2008, where it had a financial crisis caused by like over leverage and opaque interconnections between firms. And, you know, in the summer, the person bailing out, providing the bailouts to these firms that were going bust was FTX. And this week, FTX is having its 2008 crisis.
So what does that mean when the White Knight, as everybody keeps calling him, has his own crisis?
Well, it's bad.
Okay, that works.
I mean, it's bad because like the place where you thought your money was safe in crypto is not safe. It's bad also because like if you had your money somewhere else, you were like, well, if something goes wrong, FTX will bail it out, right? There was a sort of like FTX floor under the market, and now that seems to be gone as well.
All right, so there are a lot of people out there in the financial services industry, and most notably Jamie Dimon, who have not been supportive of this space, of the crypto space broadly defined. Are they right?
I mean, they certainly seem vindicated this week. Look, I mean, like you can have views about like the technology and the usefulness of tokens, but you know, when Jamie Dimon is like, this is all decentralized Ponzi schemes, like everything that comes out looking like a Ponzi scheme makes him look more right. Right. I don't think he's entirely right, but like, he's not wrong to say this is a sector with a lot of troubles.
Right. I mean, what do you think Sam Bankman-Fried, how do you think it plays out for him? I mean, you were a lawyer.
I don't know. I mean, I still don't know what went wrong. Yeah. And I think that there is certainly a possibility of like something along the lines of innocent mistake crossed with like, one thing that did happen is that FTX seems to have been kind of knifed by its biggest competitor. And so, you know, like how bad this ends up looking, I don't know, but it doesn't look good.
Yeah. Well, hey, Matt, I mean, you had a long conversation with SBF, right?
Yeah, I've done a couple of
conversations.
Interviews with
I mean, you know, and we've been running SOT strings about kind of all the things that he has said. I mean, is it a case of, I mean, this is, I guess, what we have to get to the bottom of. What he said, was it true back then, or is it a case of that the market got so volatile or sold off and there were so many losses that this is why we are having this discussion right now? Is it part of the market environment, or is it something specifically he did and how he ran or didn't run his businesses?
I mean, I never asked him, like, do you keep customer money safe? Because one sort of hopes that it does.
Just assume?
You know, like, I think that, you know, like, one thing that definitely happened here was just the failure of risk management, right? And a failure of like, you know, concentrating too much money in a bet that went bad. But like, whether that is an innocent failure or something more nefarious is, I think it's a little too early to tell.
But there's no doubt that some very smart people made very bad decisions and lost a lot of money here. I think about just the latest round of fundraising, which I think valued the company at $65 billion. I mean, there were real people in Silicon Valley like Sequoia.
Right, exactly.
Wow. I mean,
writing it down.
That
writing it off.
How do you? What do you think happened there? Was it just blind faith? Those guys don't invest on blind faith.
Well, I mean, so one thing is they didn't put that much money in the scheme of things, right? I mean, it was valued at $32 billion, but you're writing,
Okay.
9-figure checks, which is real money, but it's not like their fund.
Right.
The other thing is that I don't know, like if you're a venture investor investing in crypto and people come to you with like some wild dream and they say in 20 years you'll pay for tweets on the blockchain, you kick in some money. But then Sam Bankman-Fried comes to you and is like, look, I have real revenue. Like we make a lot of money. Like we're very profitable. We have lots of cash. Like that was all true. Like they were making money. Like one thing that is happening here is that venture capitalists are good at evaluating tech business models and maybe not so good at evaluating highly levered financial services business models.
Right.
But like they were making money,
So Matt, we take a step back. Like one thing I feel like Bloomberg is good about is like putting things in perspective. So what is the smart perspective on this? I mean, we've got an incredible rally in the equity markets today, right? Like they are focusing on something else. They're not focusing, at least equity investors are focusing on the inflation print today. So that the financial system hasn't come down, like is there some smart perspective in terms of how we look at crypto at this point?
Well, look, I mean, I think for a while now, certainly since like the bailouts this summer, it's been fairly clear that crypto could go to zero without bringing down like the financial system, right? Like that crypto is still kind of isolated off on its own. It is a place where there is, hundreds of billions of dollars of notional value and where people are getting rich and where people have money, but it is not deeply tied to the real economy in a way that like, FTX goes down, like the people who are FTX customers will lose money, but like the banks won't notice. It won't affect mortgages. There won't be foreclosures. There won't be like high unemployment numbers. It's just like it is its own isolated system at this point.
Will it bring an end to crypto?
I don't think so, but it doesn't help,
Yeah.
It doesn't help that, there's a lot of trust in crypto was undermined this summer as all these high profile firms went bust. And the person who was doing the most to restore trust was Sam Bankman-Fried, who was bailing out those firms so that their customers got made whole. And when he goes under, like I think a lot of people are going to have real doubts about trusting anything in the crypto system.
I just want to know where he is.
No, I think he's in the Bahamas. That's where
Is
their
that a good place
offices
to
are.
be?
It's a great place to
Extradition-wise?
do some snorkeling.
It's better than New York.
It is better than New York. Matt Levine, thank you so much. I know you're so busy, but I knew we wanted you to weigh in on this.
Rip out these huge columns. He's not that busy. I mean, he's just...
I think he dreams it, and then it just like comes out miraculously on paper. Matt Levine is columnist at Bloomberg Opinion, a must-read here for all of us at Bloomberg and for you. Bloomberg Interactive Broker Studio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week. Carol Master along with Paul Sweeney. Tim Stenivec will be back next week. We're going to get into the Bloomberg Big Take. This is climate change and our rivers drying up.
Yeah, I love this story because I actually did some work for some barge companies back in the day.
You did?
And went up and down the Mississippi. I didn't know how critical it is for our transfer of goods.
Yeah, moving stuff around. All right, we're going to get into it in just a moment with our David Baker. First up, though, back to Charlie Pellet and the trade. Hey, Charlie.
Well, hello there, Carol Master. We've got the Dow, the S&P, and NASDAQ. Best level of the day. Familiar theme here. 30 minutes to go, just under 30 minutes ahead of the closing bell. The Dow, the S&P, NASDAQ, all surging right to the numbers because the S&P now up by 5.2%. That is a gain of 195 points. The S&P at 39.43. The Dow up 1,132 points, higher by 3.5%. NASDAQ, though, the outperformer. It is up now by 712 points. The NASDAQ Composite Index up by 6.9%. The NASDAQ 100 index up right now by 7%. 10-year yield 3.82% with a 2-year yielding 4.33%. Spot gold 17.53 the ounce, and West Texas Intermediate crude up 0.5%, 86.27 a barrel on WTI. Stocks on track for the best post-inflation day rally in more than a decade. This morning's CPI report showed the consumer price index coming in softer than expected on a month-over-month basis, as well as in its core reading. Anna Wong is chief U.S. economist at Bloomberg.
There's strong disinflationary forces in the economy, and there's a possibility that inflation could fall rather sharply after March of next year, which would still put the terminal rate at about 5%, from my point of view.
A couple of well-known retailers are advancing. Tapestry, Ralph Lauren are cautioning that the stronger dollar is pressuring sales of high-end consumer goods overseas. Tapestry is the owner of Coach, Kate Spade, and Stuart Weitzman brands. Today it cut its revenue and profit forecast. Ralph Lauren said foreign exchange rates will take a bigger bite out of this year's sales than it previously expected. Both retailers, though, are advancing. Tapestry up now by 2.7%. Ralph Lauren up by about 5.9%. So again, recapping, we have got a big rally underway. 27 minutes to go with the S&P up 193 points, up 5.1%. The 10-years yielding 3.83%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Well, you know, I am a huge fan of these big take stories. This is where Bloomberg News, man, they go deep into it. Some really cool stories, do some deep reporting, and come back with some fascinating stuff. And this one is no different. We're joined by David Baker, energy reporter for Bloomberg News. He joins us on Zoom from San Francisco. And you can learn more about David's story on the Big Take podcast, available at Bloomberg.com or wherever you get your podcasts. And check out the Big Take on Bloomberg Radio, weeknights at 11 p.m. Wall Street time. And David, this is a story that I'm familiar with. I did some business with some barge companies way back in the day, and what I came to learn is just how critical in this technological world we live in, how critical barge traffic is to just our whole ecosystem here. But the problem is you need these rivers to be pretty darn deep, and we've got some problems on the Mississippi here. So what did your reporting find?
I'm glad you put it in that kind of context, because it's so easy for people who don't live near these rivers to overlook how important they are and what a role they play for the entire economy. The problem that we've got here on the Mississippi is a fairly big one. It's been building for months. We just have not had the normal rainfall across the vast swath of the center of the country that we should have had. And that means the Mississippi and all of its tributaries have just been shrinking bit by bit, month by month. Now, we are, as the seasons change, finally starting to see some rain across parts of that watershed. And it's a huge watershed. It stretches all the way up into Canada in parts of it. So we're starting to see a little bit more rain coming in, but it's not enough to get us over this immediate problem where in stretches of the river, it's just too shallow for barges to get through. And so they have to basically carry a lot less weight than they normally would. And even then, they've been getting grounded. And when something gets grounded, everybody has to stop and wait for the Army Corps of Engineers to come and dredge a path, and then they can start again. It's a big headache.
Yeah, we're showing some great pictures for those folks who are watching on YouTube and on Bloomberg Quick Take. I mean, great pictures, meaning devastating pictures. Tell us about, David, the kind of flow that goes through in terms of what kind of commodities are going back and forth within this waterway.
It's really quite a lot. First and foremost, it's agriculture, it's grains. The vast majority of the grains that we export to other countries come down the Mississippi and its tributaries and hit the Gulf of Mexico from there. But it's not just that. You also have coal that's being shipped to market from Appalachia and from places like Illinois. You also have steel, you have aluminum that are carried on the river. And it's easy to forget this because you think of it all draining down to the Gulf, but traffic goes both ways. It's very important to have the two-way flow of traffic there as well. This time of year, it's very important to get flows of fertilizer being shipped north so that farmers, as they bring in their crops from the summer and the fall, can lay down a field of fertilizer before the snows arrive. And that traffic isn't getting through at the proper rate right now either.
So I hate to ask this question, but what's the estimated economic impact? I'm fearing it's going to be a big number.
Yes, it is going to be a big number. The last one that I saw was from AccuWeather. They were saying it's probably somewhere around $20 billion. And it really is, thinking of this problem, it very much is like a traffic jam. Things, by and large, are going to get through eventually. But much like a traffic jam, it's just going to be a lot slower and more painful.
Is it going to be more expensive as well? I'm just thinking there's still that demand for the barges, but there are not as many moving.
Yeah, and that's a big part of the pain right there. If you look at the rates to rent a barge, they have gone down in the last week or so. The high point was early to mid-October, but they are still much, much higher than where they were a year ago. It's typically below $20 per ton, and right now it's still around 80. So it's extensive. And you got to remember, for a lot of the people who depend on the river as their usual means of transportation, the other options aren't necessarily all that easy to get to. Like, a lot of farmers can't easily get their stuff to a rail car or easily put their stuff on a truck. And so it's difficult, and it depends on where you are.
Well, on a day where we got a weaker inflation print a little bit, this is, though, people say why we might see sustained inflation is because of some of these climate change issues that are making things complicated to move things around or, threatening crops. But in this case, it's a transportation story. And as they include in that story, you and I were talking, China, we're seeing it, Europe, waterbeds just drying up. David, thank you so much. Bloomberg News energy reporter David Baker joining us via Zoom in San Francisco. All right, let's head back to D.C. and check in on World and National News with Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden says the latest inflation report shows his economic plan is working. The latest consumer price index numbers reveal inflation cooled more than expected in October. Jared Bernstein is on the White House Council of Economic Advisors.
Steady as she goes. If you look in today's reporting, I think you see some improvements, not just on the monthly time frame, but over a longer-term trend. Not out of the woods, but on the path in the right direction.
Jared Bernstein tells Bloomberg the report shows progress is being made on bringing down inflation without giving up economic growth and job creation. President Biden is traveling overseas tonight to attend the COP27 climate conference and then the G20 summit. He'll meet with Chinese President Xi Jinping on Monday to discuss efforts to maintain and deepen lines of communication between the two countries. In Ukraine, the government has expressed some caution about Russia's announcement that its troops are abandoning the city of Kherson. That would be a highly symbolic reversal for Vladimir Putin. Ukraine says it cannot confirm or deny the Russian pullback. Republicans are edging toward a thin majority in the House, but control of the Senate now hinges on races in just 3 states. Bloomberg government's Jack Fitzpatrick has more.
If either party can win Nevada and Arizona, they would take the Senate. But if those are split, then we're going to be looking to that Georgia runoff in December.
Bloomberg government's Jack Fitzpatrick reports that's deja vu for Georgia Democrat Raphael Warnock, who you may remember won his seat in a runoff. 2 years ago. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. I'm Carol Massar, along with Paul Sweeney, host of Bloomberg Surveillance and Bloomberg Markets on Bloomberg Radio earlier in the day. Tim Stenevec will be back next week. I do feel like this one story by our Lizzie Kane, first-time home buyers are getting squeezed paying their mortgage. I do wonder if, like, I don't know, 6 months from now, 3 months, this story might change.
Yeah,
maybe.
I mean, we've had mortgage rates go over 7%. So, and you know, I think about our good friend Matt Miller. He's told everybody, hey, I locked in at 3.25.
Did he really?
Yeah, just like 6 or 9 months ago.
Just done.
So at that, just in that short period of time, we've had rates, double here for a lot of home buyers, and that's been really tough. So first-time buyers are spending far more than recommended on their mortgage payments after borrowing costs in the U.S. surged. The consumers typically spend 37.8% of their income on mortgage payments in the third quarter, up from 36.8% in the prior periods. The National Association of Realtors said in a statement. The group said that the payments are considered unaffordable if the monthly bill, including principal and interest, is more than 25% of the family's income. So some real pressure there for a lot of folks trying to keep up with that rising interest rates. It's even worse in the UK, where they reset. They don't have 30-year mortgages over there. I just recently learned.
Yeah.
So they reset every couple of years.
Do they?
Yeah.
That often? Well, and it's why we saw that. We were talking earlier with our TV colleagues about the whole home builder space is kind of on fire today because the expectations are, especially with that plummet in yields today, following that weaker, softer than expected inflation print, the CPI data, that maybe the expectations are, and we're starting to hear this maybe a little bit from Fed speak, is that maybe the Fed is done with its aggressive increases, the big increases when it comes to rates, and maybe that ultimately that will play into mortgage rates settling down and maybe even topping out and maybe moving lower. In the meantime, another story on the Bloomberg buyer, Jennifer Epstein. Manhattan luxury apartments are becoming even more expensive, even as the rest of the markets cools off. Some are saying they're going through the roof. And this is something that I know, right?
It's this dichotomy, this income equality of the wealth economy, it is a huge problem in this country. And you see it everywhere. And here, just these two stories.
All right, check out more. You can read these full stories. Just head to Bloomberg.com. And, of course, you can always read them on the Bloomberg terminal.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got a massive relief rally underway with just about 13 minutes to go ahead of the closing bell. We're on track for the best first-day reaction to a CPI report since 2008. Right now, the S&P is up 200 points higher by 5.3%. The Dow is up 1,142 points, up 3.5%. And NASDAQ right now, the composite index, up 723 points, up by 7%. The 10-year yield 3.82%, with the 2-year yielding 4.33%. Spot gold up 2.7%, $17.53 the ounce. Bitcoin is surging 11.1% to $17,479, while West Texas Intermediate crude oil is up 0.5%, $86.24 a barrel. Bottom line here, stocks on track for the best post-inflation day rally in more than a decade, as slower than projected price growth sparks bets that the Fed can downshift its aggressive rate hike path. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 11 minutes left in today's trading session, and we have stocks we're seeing buying into the close, as Charlie mentioned, up more than 7% on the NASDAQ. We've got about a 5.3% gain on the S&P 500. And Paul, I mean, it is broad-based, all in.
It is. I mean, the NASDAQ is just amazing, but we've been buying them into the close here, so we've seen some strength in trading.
Yeah, pretty significant. All right, let's get to it. Let's see what Doug Sioka has to say. He is CEO and partner at Kavar Capital Partners. They've got over $1 billion in assets under management based in Leawood, Kansas. That's where we find him joining us via Zoom. All right, Doug Sioka, how are you?
I'm great. How are you? Thank you for having me on.
Doing well.
With this Notre Dame shirt on today. I mean, these Notre Dame people, you can't, they wear the Notre Dame stuff everywhere.
All in.
With a name like Paul Sweeney, you cannot object.
You're exactly right.
You guys are cute. So, interesting day, to say the least. Yields backing off, a tremendous rally. I can't remember the last day I saw such a buy-in into the equity trade. Doug, is this it? Have we bottomed out when it comes to stocks and topped out when it comes to yields?
That's obviously a $64,000 question. It is incredible, actually, Carol, to see the Bloomberg Barclays Ag now. I think this is going to be the best day it's had a single day performance since 1982. So what's amazing is the bond rally, the stock rally, the incredible decline of the dollar, and yet the Bloomberg Financial Conditions Index in the United States is actually tightening. And I don't know if the Fed would take this as all very positive news, but could this be the peak in CPI? Maybe for the core, yet to be seen yet for the headline, but yet to be seen for the core. But certainly, I think a nicely motivating factor as far as taking some of the worst case scenarios off the table.
So, I mean, I'm not sure if this is just a technical short squeeze, or we've got real and long-term investors buying in here, or if this is a trade. I'm not really sure, but it's clear that to the extent anybody wasn't paying attention, this is a market that's paying close attention to the Federal Reserve, just as the Federal Reserve is paying close attention to inflation. But it's not so much earnings, it's just what's this Fed going to do? And I guess the market's telling us today we think we're maybe, if we're not at the peak, we're close to it.
Well, it's interesting, right? So you had kind of the Powell switcheroo last week, Paul, and you had a very dovish, or at least largely dovish statement, and then a very hawkish press conference. And then we had a couple of the Fed governors when they hit the media circuit post-press conference, and they were a little bit mixed. I mean, Mary Daly seems to be reasonably dovish, and of course, Bullard and Kashkari are more hawkish. And then Loretta Mester today, who is set up to maybe throw some cold water on the rally, came out with 4 or 5 headlines around Bloomberg that probably could be interpreted as her most dovish interpretation of the new data. So if they're actually seeing, right, this long and variable lag making its way into the data, I don't know why you would need to throw fuel on the fire, and it's reflected in the reduction in the terminal rate. So the market is trying to price in what it thinks is going to be the next couple moves, and they're by no means done. And I think there's a major difference between a pivot and a pause. But when they say in the press conference, we're nowhere near considering pausing, I don't know mathematically how that is the case. If you already raised rates by 400 basis points, you're not going to raise them by 800. You certainly are past that inflection point where at least would be something that you would have to consider in future meetings.
All right, so I'm trying to translate that. Does that mean, Doug, you think we're overdone here, certainly on the equity trade, that we're just too amped up here?
No, by no means. I certainly see that there's, whether it's short covering relief rally, I do think, like anything, there was an elevation of a liquidity concern given what's taken place in the crypto complex in the last 48 hours. I think a little reprieve if the Fed isn't going to be taking additional liquidity out of the system because of the cooling off on some of the inflation data. I think that the market is trying to find some level ground, but more than anything, you're chasing out shorts pretty quickly today. But the question always becomes, like, is this just another bear market rally? And is someone in your program a couple weeks ago had said, maybe it is, maybe it isn't, but they all look the same right at the beginning. And so the question just becomes, are we at a point where the Fed is not going to end the rally by talking down any optimism by very harsh hawkish language? If you think what ended the bear market bump that took place in July and August, it was Powell and Jackson Hole. If you think what ended the bear market pop 2 weeks ago, it's when the Fed came out at the press conference. So if the Fed now, and the Red Mester being one of the head hawks, is talking a little less strongly, the market might take that as a higher probability that this may not be a bear market bounce, but something start of a next leg of a bull market.
Doug, if it is somewhat along that scenario that maybe, you know, the Fed is starting to taper here its increases, where are you suggesting folks go in this market?
Yeah, great question, Paul. I mean, I think within the equity realm, we still think defensive product sectors make sense. Healthcare, staples, some industrials, but they need to sell at low multiples, right? You're not going to get multiple expansion in a high interest rate, low growth environment. They need to have super clean balance sheets, and to the degree they can, self-sufficiency in sourcing products, okay? So we still think, right, the equity market has largely been resilient, even though the average stock is down, 25-30% from its peak. There's been a lot of damage that's been done to really good companies that have been thrown into indiscriminately and treated like very poor stocks. So there's opportunity, particularly in those three sectors. But in fixed income is likely where we're most excited, right? It's interesting when Powell talks about needing to establish positive real yields. They're there, right? 3, 5, 7, 9, 15 years out, they are positive real yields based upon the 5-year forward on the break-evens for these tips. So if you think about, right, everyone talks about guilt by association, right, collateral damage when certain classes of assets become impaired, but there's also a rising tide component when all aspects of an asset class become more attractive due purely to their spread over the risk-free treasury, and this is fixed income. And at times like this, some of these companies actually have better balance sheets, not being cynical, than the federal government, that are offering yield premiums at 300, 400, and 500 basis points above.
How much do you think the move today that we're seeing is because the dollar has backed off? I'm looking at the dollar index. It's down about 2.3%, and that has certainly been troubling for the profit picture. We've heard that from a lot of CEOs.
Yeah, I think it's a large part of it, Carol. There's no question. I mean, with everyone that came down, to your point, the CEOs coming to the quarterly confessional and saying, we read a couple of the companies we covered this morning, said the same thing, right? We have to be a little bit cautious in our revenue projections just because of the headwind of FX. Now, if that gets into the multiple and that starts to abate, then you're going to have upward surprises in the out quarters. But there's no question, Carol, you hit on one of the primary catalysts for today's move.
Hey, Doug, you're in the burbs of Kansas City there. How's the economy out there?
Yeah, I mean, it's pretty strong. It's pretty resilient. One of the great things about, I mean, I'm in southern Johnson County in Kansas, but the whole sort of broad KC area, we have a very diverse revenue base, right? There are not 2 or 3 single community pillars of large public companies that employ a lot of people. So we have a very big service industry, particularly within professional services, legal, accounting, financial services. But we also have a very diverse healthcare business. There was a cast off of a company that had been kind of the kingpin of the city back in the 80s and 90s. So the economy is palpably very, very resilient.
All right, we're going to leave it there. Hey, Doug, always fun to check in with you. Doug Sioka, is CEO and partner at Kavar Capital Partners. As we said, over $1 billion in assets under management, based in Leawood, Kansas, and joining us via Zoom from there. Doug, take care. Good to talk with you. All right, we've got just about 2.5 minutes left in today's trading session, and we're just rolling over a little bit, but we're pretty much near our highs of the session, so we're up about 7.25% on the NASDAQ. We've got a 1,100-point move on the Dow Jones Industrial Average, up 3.6%, and we're looking at the S&P 500, good for a gain of about 5.5%. So all in, certainly in today's trade.
I don't know. I still a 1,100-point move in the Dow, even though that on a percentage basis, but that still gets your attention.
It definitely gets your attention. All right, right now, stick around because we're going to join our TV team for Beyond the Bell, live on radio, TV, and YouTube, and on Bloomberg Quick Take. We're counting you down to the close on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Taylor Riggs here, counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Master and Paul Sweeney. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And Quick Take to parse the crucial moments of the day. And Carol, Tim Stenovic is really missing out here because this is a wild day. This is one for the history book.
So
you will tell your grandchildren about this one.
It's going to be between the crypto story, just the markets overall. You know what's interesting too, Romaine? I feel like in any given day, we see the major equity averages kind of bounce around. Here's one with a very definitive trade in terms of a move to the upside. We just spoke with Doug Sioka over at Kavar Capital Partners. He said a big reason, a primary catalyst for today's equity rally is the decline in the dollar. The dollar index down, Paul, 2.3%.
Can I just say, though, on that point, too, Carol, I mean, we've had these big rallies, and there's always wavering somewhere in midday or something like that. You just did not see that. Anyone who has a Bloomberg terminal, just pull up an intraday chart, and you'll see what we mean.
No, it's right. It's, you know, intentional, this trade. There was no doubt about it, no wavering.
Yeah, well, Matt Miller and I, we like to joke that we always deliver an up market in the morning, and then we hand it off to you afternoon, folks, and it kind of peters out. But today, not the story. We saw a buying strength right into the closing bell there, so that shows conviction to me. It'll be interesting to see how, you know, we trade this thing tomorrow after people, you know, digest what has been just a tremendous day with big volume.
Well said. You have a Russell 2000 that's up 6%, a SOX index that is up 10%, and a New York FANG index that's up almost 9.5%. All as bonds pretty much going out 2s to 10s are down 30 basis points on the day.
Yeah.
And we should talk more about that Bloomberg Dollar Index.
Yeah, I mean, look, and we talk about just the breadth of this rally here. I was looking at the NASDAQ 100, all but 2 stocks in that index, all but 1 are higher on the day. And actually, when you look at the gainers here, basically about a quarter of that index is up 10% or more, and more than half of the index is up 5% or more. You put it all together, and well, here's what you get. A day where we're going to quote points. 1,198 points higher on the Dow Jones Industrial Average. That amounts to a 3.7% gain for the Dow Jones Industrial Average, and you know what? That's the underperformer of the day. The S&P higher by more than 200 points, up 5.5%. And I just want to listen in here, too. You can hear the folks there on the New York Stock Exchange. They have all the veterans lined up, ringing the bell here, both at the NASDAQ and the S&P, and, of course, at the NYSE. Veterans Day here tomorrow in the United States here. And, of course, we should take time to basically reflect on the sacrifices that a lot of those folks made. Back to the numbers, though. The NASDAQ composite is higher by 7.4% on the day, or about 761 points. And the Russell 2000, Carol, up more than 6%.
A lot of veterans in my family, so very near and dear, certainly to my world, right? You know, it's an interesting day, a lot of superlatives, but I do think about various indexes, and we're going to point them out. But Taylor, you know, I mentioned it earlier, the home building. I mean, every name in that index, 17 of them are higher. So the laggards, they're still in the green with a gain, just maybe not as high as some of the other members of that index. It's just different, a very different trade today.
100%. I mean, take a look at this. Let's start at the top. Now, first of all, we're looking at, Carol, sort of the 2 subsectors underneath the headline number. To your point, the best outperformer is up 10.5%. It's the semis and the semiconductors. The retailers are up 9%. Consumer durables are up 9%. You're finally seeing some of those goods and those services inflation come down. Technology and hardware is up 8%. Carol, let's come to the bottom of the screen, because usually there's some red when you talk about who was the worst performer on the day. The worst performer is food and beverage, and they are up 2% on the day. This is a broad-based rally.
Yeah, absolutely, right? Lots of opportunities everywhere, lots of green everywhere. All right, so that means there are a ton of choices for me when it comes to the gainers. So
you got it hard today.
Don't judge me, Romaine. Don't judge me. All right, so I keep talking about the housing market because I find it a really interesting one because it's so important to the economy. Mohawk Industries, mentioned it earlier, about a 15% gain in today's trade, top in the S&P 500. You know what they do. They make floors. So if there's optimism that maybe rates are coming down and the Fed is slowing down, this could give a juice certainly to housing and maybe just the overall economy ultimately. Beyond Meat, we talked about it. It reported after the closing bell 20% higher in today's session. Reported sales that surpassed expectations in the third quarter. Did hint at stabilization after a series of declines. Its earnings loss, though, was wider than estimated, and the company's cash reserves fell more sharply than expected. So it's like, what? But nonetheless, it was up 20% so far in today's session. And Apple, you know, Romaine, you talked about the now, like so many of these big tech names were a reason why we saw the significant gains overall in the equity universe. Apple helping out big time. It's nearly 7% of the S&P, 13% of the NASDAQ 100. It finished the day, Paul, with a 9%.
And I just want to point out at that level, 146.87, that's like basically a couple of pennies shy of that 50-day moving average.
So significant, yep.
All right, I have to look for some decliners here today. There aren't too many, but one couple jumped out at me. CBOE, the options exchange, CBOE, fallout from FTX, believe it or not, so kind of bleeding out to some other exchanges there. Plus, the CEO sold some stock, so the market never likes that, so that took it on the chin a little bit today. And the interesting Hershey, Campbell's Soup, some of these packaged goods companies, you know, the food at home component of CPI was actually saw the smallest increase since December of 21. So people are going out. So you look at the names like Hershey, Campbell's Soup, a little bit under pressure, underperforming
they've
today.
They've been outperforming. Like Hershey's up 17% this year.
I know people were buying when they were locked in. They were buying ice cream and all that kind of good stuff. So, and then Altria, Big Mo, MO is the symbol. UBS downgraded it to sell here today. So UBS moving that name.
Well said, Paul. As we sort of figure out what else is red on the screen, I guess it's red because yields are lower, which means bond price higher. That's in green. Take a look at this. Carol, you don't see days like this very much. You know, we've all been doing this a couple years. You're seeing some of the biggest one-day declines that we now haven't seen, and I know I was looking at the belly of the curve earlier, since 2009. So we're surpassing all of sort of the big daily drops that we had in the midst of the COVID era. You're down 27 basis points on the day, and you're wiping out some of those four handles, which we had really become accustomed to in the last few weeks. So I'm going to get some size and scope when we think about the weekly declines, but on a day, this is just incredible when you think about the positioning and the fundamental reaction of this bond market and digesting that CPI news.
And I just want to point it out too. I was looking at some of the curves, some of the inverted parts of the curve here, and at 5:30, which began the day basically an hour before that report inverted, actually went positive. And I think right now, taking a look at it, it's about 10 basis points higher in the green.
Which is why, you know, we will see what the trade is tomorrow. How much of it is a give back and a change, or how much of it holds, and ultimately whether or not, again, top, you know, when it comes to yields, bottom when it comes to the equity trade. I have to say I'm a diver, and I look at the yield charts, and it's like wall diving. You know, it just fell off.
Diver, scuba.
Really?
I'm a scuba.
Oh, I didn't know this.
You're a scuba diver.
Something new about Carol Messer. A skydiver?
Let's clear this up.
Scuba water. But if you do wall diving, right, it's like the reefs are shallow, and then they just fall off, and the wall just goes down to the deep, and that's what the yield drop. All right.
Are you?
None of us have any idea.
I give up. I give up.
Yeah, I get the metaphor.
At least she's saving the reefs. We'll go with that.
It's so hard with this crowd, man.
It is. It's a tough crowd.
Save me.
All right, real quick, I'm just going to call out that NASDAQ. That really gets my attention, up 7.3%, because you think about the earnings we've had over the last 10, 15 days, it really called into question the leadership of the tech group. Can the tech group lead this market higher?
I'm curious, Paul, we're getting a lot of earnings next week, too, from the retailers. This is kind of the last big batch, the Walmarts, Targets of the world here. Does that actually help market sentiment or hurt it?
You know, it depends if the consumer's going to be still out there spending and kind of what they say about the back to, you know, the holiday season, which I think expectations are fairly low for the back to school. So I think, you know, it's a kind of an easy bar to handle maybe.
The S&P Super Composite Retailing Industry Group was up 9% today.
All right, Carol, one day you have to let us out on your yacht and take us diving on a little group trip here.
Don't hold your breath. You never hold your breath when you dive.
I thought you were supposed to hold your breath. No?
No, you never hold your breath when you're diving.
See, that's why I'm not a diver.
Don't do that when you're skydiving either.
Exactly. You'll explode, basically. All right, we got to run. That is a wrap for
Sounds like a dangerous sport.
Goodbye. That's a wrap.
All right.
Our cross-platform coverage beyond the bell, radio, TV, YouTube, and on Bloomberg Quick Take. We will see you again, same time, tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You know, so we were talking about retail names, and I'm looking at the retail. I mean, 72 of the 73 names in the S&P Super Composite Retail Index were higher today. And as I said, the group rallied about 9%. I mean,
that's a nice move. Yeah.
Right? And that's a big buy-in and faith in the consumer to keep on shopping.
Yeah, absolutely. So if you get maybe a little bit of moderation in inflation here, if that's kind of what we're seeing in the CPI numbers, that's a welcome respite for consumers, because if you think about the gasoline, it peaked at $5 and now we're back below $4.
Right.
I would love to see it go lower still, but that was a little bit of a help. But now, to the extent you can see core CPI maybe start to moderate a little bit, peak, if you can make that peak inflation call, which I think a lot of folks are these days, then you can change the dynamic of the discussion as to, okay, let's think about now how it may trend lower and over what time period.
But I'm going to go back to what you said. Like, let's see what happens tomorrow.
Oh, yeah.
This was definitely, a very specific trade. No moving around. There wasn't that much volatility in the trade. We did see a little bit of a pullback. It feels like maybe around afternoon or so, around 1 o'clock. But nonetheless, to the upside, buying into the close, that shows some confidence, right, and the willing to take on risk. So does it hold
what you
tomorrow?
didn't want to see, exactly what you didn't want to see is it kind of weaken right into the close.
Right?
People that kind of suggests maybe there's a little bit more of a trading mentality behind this rally, but we saw actually buying into the close. And the second thing I look at is volume. S&P volume today
right?
up 23% over the trailing 30-day average. NASDAQ up 36%. So a real strong day on a tape that was to the upside all day. So interesting. Let's see how it plays out tomorrow.
We do get University of Michigan sentiment. You guys will be breaking it in your show, you and Matt.
I will
tomorrow.
go on an airplane.
Oh, where are you going?
I'm going to Denver.
Oh.
Yeah.
Oh, all right. So
little
Matt
west.
will be breaking
Yeah,
it.
well, we'll see.
Or maybe not.
If there's some car news, that'll overwhelm everything.
But we do get also expectations and inflation expectations, what consumers are thinking about. Have inflation, peaked? And we talk about sentiment being so important, especially when it comes to inflation and how that can affect behavior. All right, let's get back to world and national news. Nancy Lyons is on it. She's over in D.C. Hey, Nance.
Thanks, Carol. President Biden is heading overseas tonight, first to the COP27 climate conference, then to the G20 summit. National Security Advisor Jake Sullivan says on the sidelines, Biden will be speaking with Chinese President Xi Jinping.
An in-depth and substantive opportunity to better understand one another's priorities and intentions, to address differences, and to identify areas where we can work together.
Sullivan says Monday's meeting is the first chance for the leaders to meet face-to-face since Biden took office. President Biden says today's CPI report showing a reduction in the inflation rate is evidence his economic policies are working. Bloomberg's Irv Chapman has more from Washington.
The lower inflation rate was welcomed by White House economic advisor Jared Bernstein in a Bloomberg interview.
We're very happy to see a report showing some easing of price pressures. Some of that, of course, has to do with lower energy costs. Take out energy. Look at core goods. Prices fell. That's been a trend of slower growth in goods prices, very much relating to some improvements in supply chains.
Bernstein said job creation and wage growth may be slowing, but jobs are still available as the economy slows but remains basically strong. In Washington, Irv Chapman, Bloomberg Radio.
Washington, D.C. authorities are filing a civil suit against the NFL, Commissioner Roger Goodell, the Commanders, and owner Dan Snyder for misleading the public about an investigation into the team's workplace culture. D.C. Attorney General Karl Racine alleges the defendants violated the city's Consumer Protection Act by not letting city residents know the truth when they kept selling goods and services. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masterlow and Paul Sweeney. I don't know about you, but there's a point where I'm like, I'm done.
Yes, exactly.
And then the producer's like, yeah, no, you're not.
You're not done. You got a couple more minutes to go.
It's been quiet. Isn't it funny, a day where what time is it, 4:11?
Yep.
On the East Coast, and we haven't really talked about Elon Musk.
No, but it's the dumpster fire. I just can't take my eyes off it. I mean, there's just news coming every day. New Twitter owner Elon Musk emailed his workers for the first time late Wednesday to prepare them for, quote, difficult times ahead. and ban remote work unless he personally approves it. Man, that's big. Musk said there was no way to sugarcoat this message about the economic outlook and how it will affect an advertising-dependent company like Twitter, according to the email, which was reviewed by Bloomberg News. The new rules, which kick in immediately, will expect employees to be in the office for at least 40 hours per week, he added.
To be fair, there's a lot of leaders out there who are like, get back to work. And even if they're not always saying it publicly, I know with a lot of behind-the-scenes conversations, they're like, we want you back in the office.
Yeah, good luck with that. I'm personally one of those.
You are one of those.
I am, but I don't think I'd be able, I think it's a hybrid is probably the new way to go, but who knows. But particularly out there in Silicon Valley, where they're used to certain levels of autonomy, we're smarter than the next guys, we're a little bit cooler. They really embraced the work from home. And in fact, they decamped for, like Boise, Idaho. And so for him to come back, A, fire half of the workforce, and then B, I'm sure he's not very popular right now, other than the $54.20 he paid for the shares.
Well, and Twitter was one of those companies that had established a permanent work from anywhere arrangement for its workers, many of whom had initially been pushed into remote work by the pandemic. What's interesting, I guess what I would say, Paul, if you're committed to still working at Twitter, it's obviously a company that investors have been patient, and yet people are like, at this point, let's figure out a model that works, right? Like, how long has this company been around? And I guess if you're in on it and you want to stay working, you got to kind of maybe work with the boss and figure out what the new way forward is.
I think that's right. He is the boss. He is the owner. So that's where you have to go, I think. You're right.
411 until we talked about Elon. That was a record.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Headline involving Twitter. Now on the Bloomberg Professional Service, Elon Musk says a Twitter bankruptcy is not out of the question. That according to a report from Platformer. Again, Elon Musk saying a Twitter bankruptcy is not out of the question. Earnings fast and furious. Just heard from Boston-based Toast. That is the restaurant software company. It has boosted its revenue guidance for the full year. The guidance beat the average analyst estimate, and after hours Toast shares, they are up now by just about 5%. Stocks skyrocketed today in the best post-CPI day on record. NASDAQ 100 index up 7% today. NASDAQ Composite Index up 7.4%, up 761 points. The S&P 500 index was up 207 points, up 5.5%, while the Dow Jones Industrial Average up today by 1,201 points, higher by 3.7%. 10-year yield 3.82% with a 2-year yielding 4.33%. Spot gold up 2.8%, $17.54 the ounce, while West Texas Intermediate crude up 0.5%, $86.25 a barrel. So again, recapping the Dow, the S&P, NASDAQ all surged today. Massive rally. S&P up by 207 points, up by 5.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. You are listening and watching Bloomberg Business Week on this Thursday. Carol Massar along with Paul Sweeney. And Okta shares, they rallied over 8% today, taking part in the overall jump that we saw in the equity markets today. Stock, though, still under pressure, roughly lower by maybe 80%, a little bit less than that. The $7.8 billion market cap company is an identity and access management software firm working in the cloud, and Guggenheim upgraded the stock just on Monday, saying the company's valuation is, quote, too compelling to ignore, despite challenges that will take several quarters to sort out. So we want to talk about the business and what is the way forward. Todd McKinnon is the chairman, CEO, and co-founder of Okta. He joins us via Zoom in San Francisco from the company's Octane 22 event. Todd, nice to have you here on Bloomberg. How are you?
I'm good, Carol. Thanks for having me on. It's great to be here on Bloomberg Radio and TV.
Well, it's great to have you here. Lots to talk about. I got to ask you, though, I want to get into the business and about the event and some of the news that you are, though, in the heart of Silicon Valley. I have to ask you, is everybody talking about the recent crypto malaise that we saw with SBF and FTX?
I think we're all watching it, and we're all trying to figure out what it means for the broader ecosystem. But one thing is for sure, Silicon Valley is in a different world than it was a year ago. Everyone is making sure that we're doubling down on our most strategic and important initiatives, and maybe some of the things we were doing last year that maybe wasn't necessary, we're not focusing on that as much as we are all of our core strengths. And that's why we're so excited about this conference and what we can bring to the whole technology market with our world-class identity products.
So, Todd, I'm just looking at the FA function on the Bloomberg terminal, and it looks like Wall Street analysts have, 30 to 40% growth revenue for the next few years, top line for you guys. What's driving that growth?
Well, every industry across the world is trying to do more technology, whether that's adopt the innovation in the cloud or keep secure and stop the risk of data breaches or transform digitally and build better customer experiences through the world-beating websites and mobile apps. And identity is at the heart of that. You need to log on employees at work and do it securely and make sure there's no phishing or any data breaches. And you need to make sure you give your customers, you're building that great new app at your company, you're getting your subscribers or your customers or your citizens online to connect to you directly. And you have to have a great app, and that starts with a great login experience. And we help our customers and organizations around the world do just that.
I see some of that top line growth, and then I see your stock is down 70 some odd percent year to date. Is this just a tech washout, or what's the street concerned about with your name?
I think there's a couple things. There's definitely valuations across the board in technology are down. And also, we took a pretty big, bold step a couple years ago to branch out into this important new market for us. It's called the customer identity management market, which is we serve with our customer identity cloud. And that acquisition, over the past couple quarters, there have been some execution stumbles in terms of integrating that. and we're working through those now and really excited to talk about our long-term products.
You're talking about that $6.5 billion deal, right? Auth0 and
Auth0, yeah.
Auth0, excuse me. So tell me about like what kind of throughput, if you will, that you're seeing already on that acquisition. I know it's early, but tell us about that.
Well, like I said, it's a really important strategic part of the market for us because traditionally identity management has been sold as part of a monolithic platform. You got it when you bought Microsoft applications or you got it when you bought applications from IBM. But and that's the workforce identity market, which is employee logging in and employees being secure. But on the customer identity side, there's this huge untapped potential where engineers and developers and product people, they're building identity themselves. They're spending their valuable time creating login pages and password reset functionality and multi-factor authentication, but there's a better way. Every hour they spend on identity is an hour they're not spending on innovation. So we have this product, Customer Identity Cloud, which is the technology from the Auth0 acquisition that can do it for them and free them up to spend every hour and every calorie they expend on great innovation in their products and not on identity, which we're the experts in.
We're talking with Todd McKinnon, co-founder and CEO at Okta via Zoom from San Francisco. Just want to mention a headline. Charlie Pellet talked about it a little bit earlier. This is coming from information, a couple sources. Elon Musk saying that a Twitter bankruptcy is not out of question. So again, this is crossing the Bloomberg terminal here on this late Thursday afternoon. So Todd, in terms of, let's take a step back if we may. The macro environment right now and the outlook for your business, it feels like a lot of enthusiasm, barring the crypto side, certainly the equity side of things because of that softer inflation print. How do you see the economy and the outlook for your business, let's say over the next 6 to 12 months?
Well, we've started Okta 14 years ago, and over the past 14 years, we've seen unprecedented growth across cloud computing. Now, cloud computing is the default computing platform for every organization in the world. We've seen security risks and the how you could avoid risks with great cyber posture. We've seen that become as important as ever. And we've seen every organization want to connect with their customers online. And the macroeconomic environment is changing. Money a year ago, 0 interest rates, investments weren't as focused and as scrutinized as they are now. And so no company, no organization, no industry is immune to that. But what's really giving us a very bright outlook for over the long term is these trends continue. Everyone is figuring out how they can adopt the latest technology for their workforce. They want to do it in a secure way. And they want to build world-beating customer apps because in the time of economic uncertainty, many times it's the best time to double down on innovation so you can leap ahead of your competitors. We know this. In 2009, when I started Okta, we took that time. There was an economic problem, but the Great Recession, and we started Okta in this downturn, and it was a good time to focus on innovation, and we built the industry-leading company because of that.
So, Todd, how would you characterize the risk appetite in Silicon Valley these days? If I had a really cool idea and I go to Sand Hill Road looking for some venture capital, how would it be now versus a year ago?
I think for the top end of the VC market, the premier funds, the most entrepreneurs going out there with the strongest backgrounds and the strongest track record, it's as strong as ever. The overall amount of funding is way down, and you see that happen in these cycles. But great entrepreneurs have great ideas. They might have to work a little harder to raise that round, and the valuation certainly isn't going to be as high. But the best ideas and the best entrepreneurs, they're getting funding. I think that will always be true because there's so much potential in technology. At Okta, we are technology enthusiasts. We believe that over the next 5 years, you're going to see amazing innovation in collaboration technology and the ways to work more effectively and collaborate with teammates remotely, especially on the security side as well. We think there's going to be security breakthroughs that make companies 10 times more productive, which is why one of our core beliefs is that we believe in this world, an open ecosystem of innovation. We don't believe that a monolithic platform should lock you in and choose and make you choose subpar applications and services just because they think it's more integrated or more secure. We think this open ecosystem where the best innovation can be used by any company, that's the right way forward, and that's what we're trying to build.
Hey, Todd, I think people are listening and they're like, okay, wait, what are you talking about? So how does it affect, people in their workspaces and everyday living? Break it down for us.
Well, I think I think we've been through the last 3 years with so many people working remotely, and we've been, as an industry and as a collective workforce, we've done a good job collaborating and communicating. But I think the tools that we use, whether it's chat or email or video conferencing, they weren't designed for this world where remote is almost the default, and working in a hybrid way in the office and remotely is the way every organization, every company operates. So I think when we get together in 5 years and we talk, we're going to be amazed at some of the new technologies. Maybe it's virtual reality headsets, or maybe it's a new kind of collaboration software that can mix a hybrid meeting where some people are remote and some people are in the office.
Is this where the metaverse, and I'm not making a joke, like I feel like it creeps into every conversation. Is this where the metaverse maybe has a real world application?
I think what I think about the metaverse is really an evolution of the internet. So today we use the internet on phones and computers, but we're going to access the internet on these VR headsets and these augmented reality devices. I think that's inevitable. I think thinking it's a totally discrete thing that's independent of the internet or a whole new version of the internet is probably the wrong way to think about it. I think it's a new way to interact with people, and more people over time will use these new devices. But it's the same internet, the same way to work, the same way to collaborate, the same way to socialize as we've seen in the past.
Todd, you're in San Francisco, like a lot of tech companies. Give us your overview of how things are in San Francisco these days. A lot of people are saying its best days are behind it. They've got some issues here. How do you think about it?
I love San Francisco. We started Okta in San Francisco. We've been here headquarters for nearly 14 years. I've lived in San Francisco since the late 90s. It's a great city, and I think every great city has challenges and opportunities, and San Francisco is trying to work through things, but San Francisco and the Bay Area has given a lot to me and a lot to Okta, so we're focused on giving back and helping it prosper through these times, which, for a lot of cities these days is a little tougher than it used to be.
All right, Mr. Elon Musk, his first email to his remaining employees was, you got to come in every day. What's the work policy at Okta?
I think we're hybrid, so we give employees the choice to work where they think it's most effective for them to work. One thing we are learning, and the entire company is learning, that there are many things that are done better in person, whether it's collaborating on that next great innovation or that next great strategy that has to have a lot of back and forth, and you have to be able to read the body language and build relationships. And that's another thing we're learning. As you hire a lot of people and as people change roles and work on new initiatives, building that trust and that bonding early in the teamwork process is really vital, especially when you get down the road and you have to deal with conflict and deal with controversy. Having that bond that can be built from an in-person working relationship is super valuable. So I think the industry we're learning and we're getting better at it.
One last question on that vein, really quick, 20 seconds. In terms of the jobs that are out there, are you hiring? Are you going to keep your workforce as it is, or might you have to let some people go, depending on the outlook?
We are growing and we are investing. We definitely are making sure our investments are doubled down on the highest priority things we have to do. Okay. And I think this is an industry-wide thing. I think many companies that are doing these layoffs, it's more about focusing their investments on what they think are their most strategic differentiators versus, I think in the past few years, I think we spread ourselves industry-wide too widely, and we weren't focused enough on the core things that are going to move our companies forward, and that's, I think, what folks are doing.
So appreciate checking in with you, and I know it's been a busy week. Todd McKinnon, thank you. He is the chairman, CEO, and co-founder of Okta, joining us via Zoom in San Francisco from the company's Octane 22 event. All right, let's get back to the headlines. Lots coming out about Elon Musk and Twitter. Charlie Pellet is on it. Charlie.
Indeed. Let's begin there, because we got a report from the information also from Platformer saying from Elon Musk that a Twitter bankruptcy is, quote, not out of the question. It is a developing story, one we're monitoring for you here at Bloomberg. Big rally today on Wall Street. Big perhaps does not describe it fully. Let's call it an epic rally. The Dow, the S&P, NASDAQ all surged. In fact, the buying continued right into the closing bell today. We had the S&P 500 index surging today. The Dow was up more than 1,000 points. S&P up 5.5%. It was the best first-day reaction to a CPI report since at least 2003, when records began. The S&P up 207 points, again up 5 5.5%. The Dow actually up 1,200 points today, up 3.7%, while NASDAQ was up 761 points, a gain there of 7.35%. 10-year yield 3.81%, with the 2-year yielding 4.32%. Spot gold up 2.9%, $17.55 the ounce, and West Texas Intermediate crude up 0.5%, $86.24 a barrel on WTI. Doug Sioka is the CEO at Kavar Capital, and right here on Bloomberg Business Week, he told us the focus very much is on the Federal Reserve.
If you think what ended the bear market pop 2 weeks ago, it's when the Fed came out at the press conference. So if the Fed now, and the Red Mester being one of the head hawks, is talking a little less strongly, the market might take that as a higher probability that this may not be a bear market bounce, but something start of a next leg of a bull market.
And among the companies reporting earnings after the close of trading, Boston-based Toast, that's the restaurant software company, it boosted its revenue guidance for the full year. Shares up by about 5% after hours. LegalZoom, we get those headlines on the Bloomberg now. It is boosting its revenue guidance for the full year. After hours, LegalZoom zooming higher by 14%. Recapping major rally on Wall Street today. CPI Thursday, the Dow, the S&P, NASDAQ all finishing solidly in the green. S&P up by 5.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet on top of it all on a busy, busy Thursday. All right, right?
No, he is.
I know he is. He's like unbelievable. Well, he was a go-to voice on crypto. He built up a digital asset empire, becoming a billionaire in the process. We're talking about Sam Bankman-Fried, who has talked with Bloomberg a lot over the past year or so on the merits of crypto and his firm. Listen to this.
We have, a few billion on our balance sheet right now. We are profitable. We're in a relatively strong place from a financial perspective.
I want to be doing something net positive, like with the making money part. I want to be a good actor there.
We've raised a few $1 billion over the course of the last couple of years, and we're a profitable business. With Voyager, I think there's $70 million there that we put in that I'm not sure we're ever seeing that $70 million again. We've not used the majority of the cash that we have on our balance sheet. We want to be flexible. We want to be in a position where we are looking forward at what we can be doing, where we can be most helpful, and where we can grow the most. I'm excited about Pathway Forward. I'm really excited about our leadership.
All right, so again, that was Sam Bankman-Fried. Bloomberg has had a lot of conversations with him over the past year or so, like talking about his business and certainly being very confident about it, if you will. So that was then. Today, Bankman-Fried is a fallen crypto mogul shutting down Alameda Research, the trading house at the heart of his digital asset empire, as he really seeks a last-ditching financing to save his troubled crypto exchange, FTX.com. We've been talking about it all day, and I feel like the headlines happening fast and furious. Sarah McBride is venture capital reporter at Bloomberg News, and she gets into, SBF and what venture capitalists saw in him a few years ago. She joins us on the phone from San Francisco, our San Francisco bureau. So Sarah, this is a guy, right? We all, the venture capital community was leaning in big time. They wanted to support his efforts.
Yeah, absolutely. He was the classic kind of young founder that VCs love to support. And in an article today, I talked about pattern matching in VCs and how he kind of checked all the boxes that VCs love to see in a founder. He was young, he was quirky in a kind of endearing way. He had a signature look because his hair, he has this kind of mop of crazy hair, and he speaks well. And it's just another case of Silicon Valley pattern matching.
Pattern matching, that's investing in someone who I guess you've had success with in the past. Is that how that works?
Exactly. So VCs have had a lot of luck in the past with young men who are a little bit quirky, clearly brilliant, who speak well, who just remind them of other founders like Steve Jobs or Mark Zuckerberg or the Google founders Sergey Brin and Larry Page. And if they see somebody who kind of reminds them a little bit of that, they're much more likely to invest. I'm not saying they'll overlook a terrible business plan, but it'll kind of tip them over the edge in many cases.
You note that among the venture capital world, the biggest surprise in terms of, I guess, the involvement with FTX was Sequoia Capital. Talk to us a little bit about that.
Yeah, Sequoia Capital is one of the oldest venture firms in Silicon Valley. It's the most respected. They invested in Apple, they invested in Google, they invested in Amazon. And so they're sort of the last firm that you'd expect to get taken in by somebody. And I have to say it's not clear exactly what happened yet, but it does seem that there were too many assets mingling between different Sam Bankman-Fried companies, and it's just surprising that they would find themselves in this situation. They say they did very good diligence.
Yeah, the problem is, as you reported here, they did due diligence on FTX.com, on FTX.us, but they did not have access to Alameda's balance sheet, and that's likely, I guess by the existing report, that's likely where the trouble really began.
Right. It seems like he was taking tokens from FTX, and they were the main assets in Alameda, and it just seems there was too much mixture going on among the accounts. I'm hearing different things. It also sounds like when firms doing diligence looked at the accounts, there may have been some access to Alameda, but you can move assets around very quickly. So if you capture a balance sheet at a certain date and time, the day before that it might have had the assets, the day after it might have, but on the particular day you see them. Yeah.
Right. Well, I love that you talk about pattern matching, because I thought that was kind of being thrown to the wayside, you know, post-pandemic, George Floyd, and we were talking a lot more about the importance of diversity and inclusion, and we saw that while we thought Silicon Valley was embracing all, that wasn't the case when you look about where the VC money ultimately goes. Just to end up here real quickly, 30 seconds, Sarah, is any of that changing? Is Silicon Valley becoming more and more diverse in terms of its investments?
Well, there's some progress, but it is just so slow. Fewer than 14% of unicorn companies that are worth $1 billion or more, have women founders. The numbers for African American founders are just dismal, slightly better than they might have been 10 years ago when Ellen Powell filed her landmark lawsuit against Kleiner Perkins, but pretty bad.
All right, well, great to check in with you and get another angle on this story, the SBF, Sam Bankman-Fried story, and FTX. Sarah McBride, she is venture capital reporter at Bloomberg News, joining us on the phone from our bureau in San Francisco. One of our top stories right now, Elon Musk, in his first address to Twitter employees since buying the company for $44 billion, said that bankruptcy was a possibility, according to a person familiar with that matter. All right, back to World and National News. Here's Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden heads off to Egypt tonight for the COP27 Global Climate Conference and for the G20 Summit. Aides say on the sidelines he will hold his first in-person meeting of his presidency. China's Xi Jinping, that meeting on Monday. The two are expected to discuss tensions over trade and Taiwan. Ahead of Biden's trip to the climate summit, he's making a move to bring the federal government in line with the Paris Climate Agreement. We get more from Bloomberg's Nathan Hager.
The Biden administration has released a proposed rule that would require all major federal contractors to set emissions reduction targets based on the Paris Accord. The Washington Post reports the rule would cover about 85% of emissions from the federal supply chain. Companies with less than $7.5 million in federal contracts would be exempt. President Biden's already called for the federal government itself to be carbon neutral by 2050. In Washington, I'm Nathan Hager, Bloomberg Radio.
Former President Trump is taking unusually harsh public criticism from conservatives after many of the candidates he endorsed in the midterms went down in defeat. Bloomberg's Anne-Marie Hordern has more from the White House.
A lot of people are blaming the former president for his picking of candidates that they say just didn't have the credibility or the quality to win, especially Senate statewide races.
Again, Bloomberg's Anne-Marie Hordern. A documentary crew looking for World War II airplanes off the Florida coast has instead found wreckage from the shuttle Challenger that exploded in 1986. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Paul Sweeney in our Bloomberg Interactive Brokers studio. We're streaming too on YouTube and on Bloomberg Quick Take as we speak. I was just looking at the most read stories in the past 60 Minutes, and there's 1, 2, 3, 4 that have to do with Elon Musk, and there's a bunch with FTX, but there's 4 with Elon Musk, because we just have a late story, and I think we've got a match, too, from our own Ed Ludlow. Elon Musk, in his first address to Twitter employees since buying the company for $44 billion, saying that bankruptcy was a possibility, according to a person familiar.
Yeah, I mean, that's really just every day we see some major headlines coming out of there. Yesterday, cutting half of the workforce, now talking about bankruptcy. So it's a fast-moving situation, and not being a public company, you just kind of rely on Elon Musk and his Twitter feed.
Here's another headline: Twitter executives Robin Wheeler and Yoel Roth are both departing, and I'm not sure. I'm going to try and look up exactly what they did. Robin Wheeler, Twitter CEO. Robin Wheeler is Wheeler was the Twitter CEO.
Well, what I'm looking at here is kind of on the Wall Street side of it, the financial side. Wall Street banks that lent $13 billion to help fund Elon Musk's buyout of Twitter have been quietly sounding on hedge funds and other asset managers for their interest in a chunk of the buyout debt at deeply discounted prices. Some funds have offered to take a piece of the loan package at a discount as low as 60 cents on the dollar, which would be among the steepest markdowns in a decade. And that's probably before this bankruptcy news came out. So I'm not sure what's going on at Twitter. I'm not sure what his communication strategy is, particularly if he is in the market trying to sell this debt.
But it's interesting, right, that they're trying to do this. Forgive me, Robin Wheeler, it looks like is the company's global head of the company's global ad sales team, at least was as of, she's departing along with Yoel Roth departing. So we're getting lots of changes. Roth had been in charge of trust and safety functions at Twitter. So again, forgive me, headlines coming kind of fast and furious when it comes to Twitter. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're following a developing story involving Twitter. Sources tell Bloomberg Elon Musk, in his first address to Twitter employees since buying the company for $44 billion, said bankruptcy is a possibility. The social network has a significant debt burden from the acquisition and has seen a pullback from some advertisers that are concerned about Musk's plans for content moderation. Both the information and the platformer earlier reported Musk's statement. Also, a headline from another well-known San Francisco-based tech giant. Salesforce says Gavin Peterson is stepping down from his position as president and chief strategy officer. Today, we saw shares of Salesforce.com also taking part in a major rally today on Wall Street. CRM on the ticker, shares today up by 10%. The Dow, the S&P, and NASDAQ all surged. It was a buy-everything relief rally. Slower than projected price growth spurred bets that the Fed can downshift its aggressive rate hike path. S&P today up by 207 points, up 5.5%. The Dow today up by 1,201 points. That was a gain of 3.7%. But the NASDAQ Composite Index, by far the outperformer. NASDAQ today up 761 points. That was a gain of about 7.35%. 10-year yield 3.80%, with the 2-year yielding 4.32%. Spot gold up 2.8%, $17.54 the ounce. West Texas Intermediate crude up 0.5%, $86.22 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Friday's Eve, Thursday, November 10th. Carol Master along with Paul Sweeney. And I do feel like now, again, one of our top stories has to do with Elon Musk and what he's doing at Twitter. It looks like a lot of key senior executives, our team has been reporting on this, leaving the company. We know he let go a lot of people and then I guess brought some people back. But there's stories about Wall Street trying to sell some of the debt. I mean, there's a lot of stuff going on right now.
There's a lot of stuff going on there. There's a lot of cross currents, and if you're Elon Musk, there's a guy that doesn't typically, continuity, is not necessarily his calling card. I think he likes
checking with
disruption. Yeah, I think he likes disruption, keeping people on edge. But I just don't know how you could go into a company, an established company, a large company, and let go half of your people. I mean, how do you identify them? How do you, do you just assume it was overstaffed by a factor of 2? I mean, that's a tough assumption to make. But and then you're going to have obviously, presumably, some more attrition. People just say this is not the most stable of situations. I got my cash. I sold my stock for $54.20. Thank you very much. I'll look somewhere else.
Well, the tricky part is, it's a private company now. It's privately held, but it's under the umbrella of a public company. Well, I don't know that it's under the umbrella, right? Because it's separate.
So he bought it personally, but, as we saw over the last 6 months, he sold a lot of stock to pay for his stake, and that certainly weighed on Tesla stock over the last 6 months. So, it's been tough. I mean, we talked to Matt Levine earlier, and he's kind of got, he kind of puts it right into perspective. He's lost on a lot of fronts on this one. A, he bought it. B, he overpaid for it. Arguably, a lot of people say. C, he's left with a lot of difficult financing yet to complete on the part of his investment banks.
Yeah, and you do wonder about the brand, what's going on. All right,
and then advertisers. So.
Yeah, exactly. All right, we're going to wrap up with some lighter fare, if you will. I don't know if you've gone out shopping, Paul, yet for your Thanksgiving fixings and trimmings. Lots of reports about there that it's going to cost 13.5%, at least one of them, that it's going to cost 13.5% more compared to last year in terms of what you're going to spend on Thanksgiving. So let's see what the cost of the star of the meal will set you back. We're talking about the turkey. Butterball CEO Jay Gendron is with us via Zoom in Chicago. Jay, nice to have you here on Bloomberg. How are you? And tell us a bit about what the market looks like this year for Thanksgiving.
Well, thanks for having me. It's good to be with you all.
Sure.
Well, it's certainly, as you mentioned, inflation is something that's impacting a lot of people this time of year. But the really good news as far as the Thanksgiving meal is that turkey isn't really seeing that much of an impact when you look at the prices for the whole turkeys at Thanksgiving. In fact, some recent data that we have right now shows that the feature prices that many of the retailers are selling the product for is the same as last year. Some have gone up slightly, but a great deal of them are actually selling the product exactly the same price that it was last year.
Talk to us about the costs in your business, Jay, that that you may have to pass along some or part of it to consumers. Where are you seeing some inflation in your business?
Yeah, great question. Certainly we've been impacted just like other industries have. Every time you turn around, something is going up. Our biggest impact to our costs, though, is on the feed side. It's the corn and the soybean meal, which has really increased quite a bit over the last year. That's the biggest pinch for us. It's the biggest single thing that goes into the cost of our product. But then certainly we've experienced increases in costs for other ingredients, packaging materials, labor, et cetera. There really isn't any one sector that's been left out of the inflationary impact.
Hey, Jay, so you talk about packaging, labor, feed, all of them higher. Costing you more, but do you get all that you want? In other words, the supply chains are working and you place an order and you get what you need?
Well, it had been a real challenge for some time. It's certainly gotten better here in the last several months, which is great news. But we do still experience periodic outages that we have to manage through. Fortunately, our purchasing teams have done a great job in building buffer stock where we need it, having secondary suppliers. But there are certainly challenges. Transportation has gotten a lot better lately, which is great. Certainly very important for us to be able to get those turkeys to market so that people can buy them for Thanksgiving. So we've seen certainly an improvement, but it's not without its issues still occurring.
Jay, how was your business impacted during the pandemic? I mean, I just remember reading stories way back in the beginning how poultry and so on was that's an essential business. We got to get people in there. So just give us a sense of how your business has kind of evolved over the last several years during the pandemic.
Sure. Yeah. During the pandemic, it was certainly difficult. The biggest part was just getting the labor force there. Understandably, a lot of folks were reluctant to go to work. It was something brand new that we haven't experienced here. So it was a challenge. We did a lot to try to keep the plants running. Fortunately, we never had to shut any of our plants down for any period of time. A lot of thanks goes out to our associates who showed up day in and day out to make sure that we got the products made. But it was critical. I mean, it's certainly critical to this country that our food supply is uninterrupted. And fortunately, our people certainly recognize that. They put through the effort to make sure that we continue to produce product. It may have been not exactly the same products we always produced. We had to change some things a little bit, get a little bit more efficient. We learned a lot, obviously, very positive things out of that as well, how to run our operations better, how to do more with less, and it really came out positive for us at the end. But it was certainly a challenge for us as well as it was for anyone else in the food supply chain.
Jay, you've been at that company, I think, roughly 20 years or maybe a little bit more than 20 years. Prior to being CEO, you were Chief Operating Officer, so you were dealing with transportation, warehousing, all that good stuff. You've seen logistics, the costs, managing that. I do wonder, as we look forward and try to understand what kind of inflationary environment we have longer term, do you anticipate that we don't go back to the way it was pre-pandemic and things backing off, that because of either climate change or pushback on globalization or other big macro factors and shifts, that these high prices are going to stay? And we just got about 30 seconds.
Sure. Yeah. Well, we don't expect it to roll back to pre-pandemic levels, certainly. We're still seeing inflation. Rates are still going up on virtually everything, just not quite as fast as they have been, which is good news. So we're seeing it start to slow down a little bit. But really, as we're looking at our forecasting for next year, really everything is more expensive and will continue to be. So hopefully we get some moderation and it's able to, we're able to pass on that moderation to consumers as well. We don't like having to raise prices anymore than the consumer likes paying for them.
Totally get it. Really important question, 5 second. What's your favorite Thanksgiving pie?
Oh, favorite's got to be apple.
Okay. Nice job. Jay Gendron, Chief Executive Officer at Butterball, joining us via Zoom from Chicago. Paul Sweeney, thank you so much. Pitch hitting, and you're a gem, as always.
Pleasure, as always.
Let's see if it quiets down tomorrow.
Yes.
All right. Have a good evening, everybody.